Wednesday, 18 September. Critical price points, as usual. This is the weekly chart for today. We have the low of the day, the consequent encouragement of the weekly wick, and the previous closing price of 9 September. We still leave those relative equal highs in here. We leave that open. Once again, we trade into the volume imbalance. So let's zoom into the daily chart. As you can see here, this is normal price. This is the normal price, the normal closing price, and then we have yesterday's opening price here. Very important point. We have the consequent encouragement of the weekly. Those weekly values, we have that here. We have the daily fair value gap. Now we have the settlement price on. As you can see, the closing price is lower. This is the settlement prices. These are both of them. I used both of them to kind of frame my trade as minor support and resistance. But the biggest support that I had was I was focused on the yesterday opening price. So now we take this block. We divide that up in quadrants and we zoom into the 4-hour chart. It's the same day and we see immediately this wick. We annotate that the 25% range of 16 September daily range. This block, the 25% of that, it's almost the same as the 25% range of the daily order block, or daily range, excuse me. And then we have the consequent encouragement of that. We trade up into that and then move lower. This is the opening price, as you can see here. We trade into that at 9:30 something, over 10 o'clock, and at 10:30 we drive lower. This is the fair value gap. Eventually we drive into that. What is close to that, the weekly consequent encouragement. These are the price points that I frame my trade on. The consequent encouragement of the 4-hour wick, I take that because at point of trading I look at the 4-hour chart, and when I look at the 4-hour chart I look at what price points are in close correlation to the higher time frame price points, which is in this case the previous week closing price. So this is the 50-minute chart, naked chart, except for the volume imbalance. These relative equal highs in here after FOMC, we still leave that open. But these are the new week opening, new day and week opening gaps. I really don't like the way of the indicator, yeah, whatever. Take note of this and take note of that. Take note of this. What is in close correlation? Oh my god, I forgot that slide. Okay, well, this is trading model 1, trading model 2, price delivery. Yeah, just go back to the video. You saw here, you could see here a new day opening gap, and a gap here, and a gap here, and a gap here, which is resistance, support. The 1-minute chart. I'm missing something. Okay, let's zoom into the 1-minute chart. As you can see, in here we have 9:30 opening bell in here. This is the first presented fair value gap. This is where we short. This is where we long. These are the price points that I look at when I start trading. As you can see in here, we trade up into that. We find support here and then go higher with the underlying message of the fair value gap. Then once again here at the second macro, we draw down. We stop at the yesterday's closing price. We draw up again, and that's where I want to take my trade to play the low of the day, take the sell side out. Now let's clean it up a little bit and focus on the price points that really matter. This was the new week opening gap, new day opening gap. Here was also one. This is a point of high resistance. We drop down. We have the 25% range of the wick, which has also happened to be 25% range of the daily range. So this is a very, very high point of resistance. In this case, if we trade up to that and we trade down to it, it's a point of support. But we want to take out these relative equal lows, like I said, the sell side. So this is a point of interest. If these lows were relative equal, if this low was lower than this low, then of course it would look a little bit different, and this low went below this low, and we left this, we did something in here, something along the line like this, but then the other way around, and then we would go draw up higher. But in here we have buy side, this buy side, and more specifically we want to trade up to this support range. So when 9:30 opens, first thing I look at is the yesterday's opening price. So we have the first percentage fair value gap, and here you can see buy side is keep getting engaged. We leave open sell side. Here sell side is engaged too, but I really want to trade to the opening price point and some previous sell side liquidity that was resting on the left side of the chart. We have the 950 till 1010 macro. We take the high and the lowest low of the opening range. One standard deviation of that. What is that? Yep, that's the consequent encroachment of the weekly wick. So that's the target. So let's remove the standard deviation price points for a moment now. And we see we can't trade this inverse fair value gap. You put your stop loss in here. Fair value gap for the downside to take out this low, and more specifically take profits in here. Then in here we are focused on a long position. We are waiting for a moment of a bullish momentum, which is clearly is this. Then we trade lower. We don't want to see price close below this point. We wick below that. We have a fair value gap in here, so that's where we enter to trade the long side and trade up into here. I am forgetting so many slides. Okay, I'll just explain it like this. In here, like I said, we have a point of resistance. I will go to the entry models. Okay, this should do it. In here we have a point of resistance. We see here we leave with some momentum. We come back in this fair value gap in here, the orange one, and we somewhat respective inverse fair value gap. We are in the 1050 and 1110 macro. This is when price trades down. We leave a fair value gap. This candle here, this is initially where we enter on a short position, and we put our stop loss. Then this is annoying. I forgot so many slides. Our stop loss here. So you see we don't trade up into this. We can pyramid this. We can pyramid this. We can pyramid this. Take a look at this when we see the fair value gap and we want to short price points. In here we leave a fair value gap. That is here. This is the fair value gap. Boom. This candle we don't trade up till this high. We can and then go lower, but more specifically is that we leave a order block. This green candle, when we trade above that, we trade back into that. This is where we enter for a short position. We can pyramid this. I'm gonna stop with the pen. This is annoying. We can pyramid in here. this fair value gap, we can pyramid in this, and really trade down to this. Okay. Then we leave buy side. We really want to take out the relative equal highs above the volume and weekly volume imbalance. So right now I am locked and loaded to get myself a long position to take out those relative equal highs for the FOMC meeting. But I would close the trade right here. I would take partials here, and if I didn't have this buy side liquidity by lunch, then I would close it if we didn't hit that before 2 p.m. because I don't want to be in a trade at 2 p.m. when the news driver comes out. When the news driver came out, I'm done. I don't want to trade anymore. It's over. Especially it's in the PM session, and I don't want to trade the PM session yet. I want to focus on the AM session and the lunch macro some days. So as you can see, we come in a point of resistance. We have a turtle soup. We trade up. We leave a fair value gap, an order block. When we trade down in this case, we have a fair value gap. We trade down in the low of that candle. We enter. We trade down in the fair value gap. We pyramid, and then we go up. Take out this high, this high, this high, this high, and ultimately the buy side liquidity of the lunch macro. So thank you very much. I always know that there is one person who is always watching. I don't know who you are. I would like to know who you are. Just say hello in the comments. Nobody's watching this, bro. Don't worry about it. Just I hope you're learning something, or you're laughing at me that this guy he buys my stop loss like I do when I watch these YouTubers trying to trade, failing, showing their emotions online, showing how they fail online, showing their trades online prematurely. They're not ready for it. So thank you for watching, dude. Hope you are. I surely hope you are doing very well with trading. Thank you.